Hi, welcome to this video day, which is on Saturday, the 8th of December. We're just going to be looking at three Forex pairs today. They all include the yen, USD JPY, Euro JPY, and CAD JPY. Now, we've covered the yen a lot in recent videos. We think it is the currency to focus on as we turn into 2019. We think it's making a major turn to the upside. Now, we have had some profit in our yen trades, but I think it could get a lot more. Now, since I did my last video, not too much change in the price action, but in the fundamentals and sentiment behind the chart, there has been. So I think these pairs are really great risk to reward opportunities. Now, in terms of just for New Year's, when I'm doing my charting, I am going to be using very simple technical analysis, only focusing on big levels that match to key institutions in the market. But to find them, I'm going to use our favourite tool in Forex trading, the COT, the Commitment of Traders report. Now, if you're unfamiliar with this tool, it's a great backup to your technical analysis, and you can learn more about it on the video link beneath this one. Just want to launch the video through right now. Just keep in mind what we want to do is always trade with smart money commercial hedgers, and their positions diverge away from speculators. Now, in terms of the COT this week, it's delayed due to former President Bush's death, so it'll be out next week. But the positions, in our view, will not have changed. I'm just going to go through the positions in terms of USD, JPY, just for new viewers to our video, because they're just very important in defining a key level in this pair. Right, now what we are going to do is we're going to go to the chart, to the charts, but just keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 major Forex pairs, you can simply click on the link beneath this video and get live access to our member center. Right, USD JPY first, and just a quick look the COT-net traders positions for new viewers. Right, just very quickly on the COT-net traders positions, just for new viewers, just when we're looking at the COT-net traders data, keep in mind it's foreign currency first for the USD. We obviously trade USD JPY. We'll reverse the chart in a moment. This is just to show the importance of this level here. 88 in JPY USD, it's equivalent to 114 USD JPY. It's the key level, okay? And yeah, in terms of the commercials, smart money and speculators against them, this is the level that they battle at. And you can see it here on the left. Commercials heavily long, specs heavily short. Commercials pushed off by about 800 pips to the upside. Over here, they aggressively buy again into the level, push it off. They drop down their hedges a bit, but then when it comes down to the level again, they step up, push it off. Last week, they'd stepped up. This week, they'll have stepped up as well, in my view. They're not going to change their view of this level. They've defended it for over a year. They pushed it up a little bit, the Japanese yen, or pushed USD JPY down a little bit. And the way the chart looks to us at the moment, it looks like the USD is finally going to break to the downside. So what we're going to do now is reverse the chart around the right way. We're just going to look at the weekly chart very quickly to see the big levels, then go to the daily chart and draw levels of entry, stop and target. Right, just on the chart of USD JPY daily, I'll just draw some levels for entry on a rally or on a break lower, and also do the stops as well. But let's have a look at the fundamentals and sentiment, because since the last video that we did, they've got more bearish for the USD. US rate hikes going forward now fully priced in, and the market has actually pared back how quickly they think the Fed will raise rates. They've done that quite dramatically since the last video. Now, just keep in mind, USD JPY couldn't break the 114 level decisively and carry on to the upside when the market was more bullish of rate hikes than they are now. Now they're more bearish of rate hikes. We see that level as even more solid. Also, risk off and stock market weakness. You've got weakness in the stock markets. Investors a bit nervous. That's bullish the yen. Any risk off is bullish of the yen. Number one safe haven currency. So that's additional fundamental in favour of the yen. Now, in terms of price action, obviously there's the 114 level. It's interesting how the price action has evolved. Okay, so big move up through 114 here, big blue. Can't carry on to the upside, immediately rejected. Below the 20-day moving average, consolidates, goes back through it. 5 candles try and take out the level. They can't. Go back below the 20. Then we come up for another go. But like I said in the last video, this just looks so half-hearted. Just one candle pokes against the level. These 3 can't reach it. Big red down. Take us below the 20. Blue can't get above it. Obviously this red can't, and this blue's sitting there. I think now we've broken the 20-day moving average this time. I just don't think we're going to get back above it. I think the rally is exhausting. I just draw a trajectory line in there. And you've also got resistance here. There's 2 tails I'm drawing through, 2 bodies and another tail. Okay, so there, that big red is, let me just get rid of that line. That big red there, I think, is the decisive break. Can't get back. On the blue, red obviously can't get back. I'm just sitting there. So yeah, if you wanted to come in on strength, then sell back to 1340, or just wait for a bit of weakness off that level. Stop back from the 114 level. I would say 114.60. Okay, we're looking for a really big trend to develop to the downside, so that's going to offer a great risk to reward. You could come in on weakness, then your stop would be lower. We saw on the weekly chart 112 was the key weekly level. You got tail there, 2 bodies. Drawing just below 112, I'd wait for 111.70 to get taken out. Now, if you come in on weakness, you don't need to be back behind 114. I think this break will confirm a downtrend is going to be in motion. So you stop back just behind the 20-day moving average and maybe those 2 bodies there. So about 113.40 or 50. Then you can see if she runs to the downside. And obviously the targets are pretty ambitious on the weekly chart. We're looking for well over 1,000 pips longer term. Now obviously there'll be twists and turns along the way. Now if we do break this level, I think we'll go down towards test the 110 level. So a break of the 112 level will go down very quickly to here, and then we should keep going to the downside. Now when you look at this chart, if you just look at it purely technically, you can't see, or can't sort of how would I put it, postulate that a big trend is going to develop. The fundamentals and sentiment are telling you that, though, and also the CAD net traders positions. Now at the minute, haven't got much out of this pair at all. We're in at 113.60. Okay, we're below 113, but it's not been a big move yet. I think next week could see a big move to the downside. We shall see. Right, let's shift over now and look at Euro JPY. Right, on the Euro JPY daily chart. I'm not going to do the weekly chart in this video. Did it in a previous video. I'm just going to give you the level I think the euro could go down to, which is a long way off the bottom of this chart. Also in terms of the fundamentals, we've done a lot of general euro videos, just so bearish in terms of the eurozone, in terms of the economy, slowing up really quickly, all the political problems in the zone. Market is just being generally too bullish of the euro, just out and out bearish in terms of euro fundamentals, obviously very bullish of the yen. Now in terms of the way we've been playing this trade, just up at here when we touched the 133 levels, so we first became really interested in the pair, heavy commercial selling, spec buying, and we just sold off the round number 132.60, which comes down really nicely, then reverses back up, stopped us out at 129.50. In hindsight, we should take some profit in a little bit lower, but that's hindsight. Still 300 pips, and then we wanted to get back in, and we noticed the 130 level looked good resistance. See all these pokes above the level, couldn't get through. Didn't think these two would. came back in at 129.60 where we came out at. Falls nicely to the downside. Thought we were going to run on, okay, and this happens, or has happened a lot. Many Forex pairs recently just suddenly chop sideways. Very choppy, really. Price action contained between 128, 129. Now 129 now looks decent resistance. You could, if you got above the level, sell back through the level of the stop behind 130. But I think the real high odds break is basically to the downside. I'm just going to draw a trajectory in there. So double trend line resistance, just come down to 128. And yeah, my own view is this level needs to be taken out. And if it is, then the euro will travel south. So 127.70. You can put your stop at 129.60 to swell back from the round number. See if she runs. After tight sideways consolidation, you very often get a move up in volatility if it breaks the upside or if it breaks to the downside. We're obviously looking for a break to the downside. So I think that's the high odds entry to come in. It will basically end the sideways consolidation. Now, where could we go to? Well, my first level would be 125. You have about 2 to 1 in terms of your risk to reward to that level. But I'd be really focused on the big move down to weekly support, which I see at 116. So basically 1,200 pips from where we are now. Now, this is a long-term trend, I would stress. Okay, so we've got a real long-term perspective. Obviously, we'll manage the trade as it goes. So we've got one profit of 300 pips out of it. We've got another of about 160. So 460 so far, but I'm looking for it to get bigger, hopefully, of course. Obviously, we shall see how we go, but I've got a feeling, that congestion could end next week with a break to the downside. Right, let's go and look at our last chart, which is going to be CAD JPY. All right, on the CAD JPY daily chart, again, just doing the daily today. Weekly chart, I'll just give you the level we're looking at long term on the downside. Now, in terms of this trade, it's a long-term trade. Again, I'll just draw my levels in a moment if you wanted to get into it. Now, in terms of the fundamentals and sentiment, just out and out bearish for the CAD in our view. In our last video, we were saying interest rate expectations from the market just too bullish. They expected the Bank of Canada to indicate a rate hike possibly this month or in January at their meeting last week. We didn't think that would be the case. We thought they would be dovish. They were dovish, okay? So interest rate expectations have peaked. That is bearish for the CAD. Commodity prices, with crude oil so weak, the Bank of Canada were not going to hike interest rates or be hawkish. Crude oil's been hammered. It's a major export of Canada. And yeah, sure, it can rally, but I don't see it going back to a bull market. Commodity prices generally are topping out. They're going to be going lower. That's going to weigh on the CAD. And to risk off is bearish all commodity currencies. And of course, the CAD, a commodity currency. So yeah, in terms of big trends, you always want to keep the fundamentals and sentiment in mind because they're going to be reflected in the chart. And I say that pretty frequently. Now, in terms of the way we got into this pair, almost identical to the way we did it with Euro JPY. Come up here, up towards the 89 level. Heavy commercial selling into the level, spec buying. I think the level's going to hold, just come off the level. 88.60. And then see if we go lower. We wanted to see 87 get taken out. It decisively is on that red candle there. And we decided that that should hold rallies. Okay. So if you notice when we chop sideways, we do try and get up to level. We always come off it. Okay. So like there. So yeah, I've said this, I think in the last video, when you get choppy sideways action and stalls, you best off take 50% out when you've got enough. Then sell back to a major resistance level. Now, in terms of when we did the last video, we were testing the 86 level, which we felt would hold. Okay. Obviously, it did hold. Yeah, Bank of Canada sent the CAD down. A little bit of a rally on Friday. Just don't see much upside at all from here. Now, in terms of yeah, how would you get into this one in terms of a fresh trade? My own view is that candle tail there, the blue one pokes up, can't take out that one or the round number. So that's pretty good resistance. If you want to take her on a break lower, see there's quite a bit of support in the 84 level or around the 84 level. So over here we found some support. Here we've come back through. The way I see it is like if you wanted to come in fresh, you could sell a failed rally, but if you came in through 84, 83.70, I think that would be clear of round number turbulence. Wouldn't worry about taking that tail out. Then see if she runs to the downside. Stop back from 85 behind the 20-day moving average. Okay. Now, in terms of first downside target, on the daily chart, it's going to be down towards the 82 level, in our view. On the weekly chart, down to 75. So a long way from where we are now. Now, like I said, it is a long-term trend, okay, for us. And yeah, so far it's around 400 odd pips. But yeah, I just feel this one could go to over 1,000 pips longer term. And I'm thinking, yeah, I think I said it when I was doing last chart. In the week ahead, we could really see some turbulence in the market, risk off. It's going to damage the CAD or hurt the CAD to send her lower. So I think a high odds break to the downside. You could obviously sell a failed rally if you wish, but just feel if we break down next week, go down to our first target, then hopefully run on to weekly support. So they're the currency pairs for today. Yen, just for us next week, looking for it to turn really bullish and push other major currencies down. We'll see what happens. But yeah, so far, yen showing decent strength in the crosses. Looks like it could confirm a move on USD JPY as well. So that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.